So we've definitely got a bit of action in the currencies at least. Stock indexes are less interesting, but this downgrade from the Chinese this morning has certainly sent the dollar a lot lower. So probably quite a bit to look at. If you've got any requests on any specific markets, please let me know, and I'll do my best to try and figure out where we're going and what's going on in these markets. What have we got at the moment? Australian dollar, so we might as well just crack on with that. Okay, I'll do the FTSE after then, Keith. So the Aussie was messing around between some Fibonacci levels over the last few weeks. You can see we got to the 95.10 area, which was a good 38.2% retracement of that whole bear move down from the sort of second quarter of the year. Then we messed around down to the 92.57 level, so those levels work quite well. Anyway, we've pushed higher, and I imagine a lot of that's to do with what happened this morning. We've pushed. Hang on, just let me move it up a bit. We've pushed higher, and this all looks very positive, isn't it? The 100-day moving average acted as very nice support when we got overbought on the daily chart, and acted as a bit of a springboard in the end. We did manage to push off that, and the blue line is the 55-day move. No, it's not. It's 21-day moving average, and again, that's really acted nicely as support. As you can see, we've just trailed nicely on top of that. We've now pushed through previous highs, September highs of what was that, 95.28, which was just above the 95.10 fib level. Now that we're through there, it all looks very positive indeed. So I'm guessing we're looking at 94.29 as the next sort of target. Sorry, hang on. That's not right, is it? 96.63 is the next target. Well, we're practically there now. So we've seen, what have we seen today? 96.20. So we're practically there. And then there's no reason to look. We are getting overbought, but certainly wouldn't be looking to get short here. Stay with the uptrend. It's a good 6-7 week uptrend. Stick with it. I think we're looking at 97.15 is a good level. And then we've got that 200-day moving average at 97.64. So that's sort of 50-pip area is probably where we're going to start to struggle again. But I certainly wouldn't be. Just have a look now. Weekly chart looks quite positive. Short-term chart, yeah, we're getting overbought, but then we have been overbought for quite a long time, so that doesn't mean anything at all. Don't see anything negative on the 4-hour chart, really. Not wise to fight the trend. Never is. Stick with it. If we do happen to dip lower, then I'm guessing that the previous highs of 95.28 down to 95.10 fib support will act quite well. We'd be worried if we started breaking below the sort of 95 double O area, but as long as we hold above that, things look positive. Okay, unless there's any questions about the Aussie dollar for today, I'll move on to the FTSE. I've had a first have a look at the FTSE. That's one of the slightly more interesting than some of the other indexes. I mean, not as positive either as, say, the DAX, FTSE, and the Eurostox. But we'll have the DAX, Eurostox, and the S&P. FTSE. Okay, so we are in an uptrend. We've been in an uptrend for years, but the most recent leg higher comes from May this year, so it's a good 6-month uptrend. You see, we tried to pierce that on the 24th of June, but we although we pierced it, we closed above it, so the uptrend remained intact. And we pushed on. We haven't really gone anywhere since in the summer. We've just been trending sideways now for well, literally weeks, if not months. You can see that here, this area where we're hovering above the black line, the uptrend, and we're hovering above decent support from 63.51, although we pierced it last week, but we managed a positive close. So again, the fact that we didn't close below there is important. So all in all, it's bullish, fairly bullish, although we are really going sideways. So what can we make of it? I'll scrunch it up so you can see that bull trend. As I said, when we looked at the weekly chart, we did pierce that bull trend last week. We managed one day close below it, but we quickly recovered. The next day we rocketed higher. Okay, so the 100-day moving average has been a fairly good indicator of support and resistance. That's the brown line here, which I'm sort of running my cursor along. You can see that acted quite well as support. We hovered around there through summer, and then once we broke below at the end of September, we saw quite a swift sell-off. But then the bounce back has taken us back above the 100-day moving average, so that's a positive. We held the 6-month uptrend. That's a positive. We're sitting above 21.55 and 100-day moving average, as well as 200-day moving average, of course. So that's a positive. We are getting a bit overbought in the daily chart. But all in all, we haven't really gone anywhere since the beginning of, well, certainly the middle of July. Trend lines, well, there's not really much you can say trend line wise. We are sitting above 6500. This 60, hang on, where are we now? I want to just show you on the weekly chart. The 6350 level was really important. I've taken my fib from the beginning of July, and we've had the rally all the way up. So 6351 was quite important on the way down to 23.6. It's the first big fib support level on the weekly or monthly chart, which coincided quite nicely with this uptrend line. So I was really looking for us to hold, and I was a bit surprised when we pierced through it, and we did get as far as 64.57. So I mean, we pierced a long way through it. Okay, on the grand scale of things, on the weekly chart, you can see that doesn't really mean anything at all. But on the daily chart, that was a bit of a surprise. Anyway, we rallied sharply off there, but that is worth noting. As you can see, the daily chart, yeah, we pushed quite a bit higher. We actually hit the next fib support level at 63.12, and that pretty much did the job. I'm trying to sort of figure out what goes on next. I mean, I'm really surprised at this strength, especially after this morning's downgrade. Stock market sold off a little bit, but not much at all. So again, for the last 3 days, we're just going sideways. 6501 is therefore the level to watch. It's fib support, 6500. It's fib support. It's 55-day moving average support. Yesterday, the 21-day moving average held downside. So these moving averages do seem to be quite important at the moment. Must be something people are focusing on. Short term, here's the picture. We've had a little uptrend from, let me see now, this is October, so we've got since the 9th of October, just a week and a half. We've got to be careful. We tested that trend line this morning here. As you can see, pierced it just slightly, but we're back above it. So the levels to watch are 65.16, 65.56. That's the 50-point range that you'll want to be trading, I think, and waiting for a break. We're so overbought that you've got to think that a break to the downside is a real possibility. I mean, I know we're in strong uptrends, but I mean, you know, every uptrend needs a little bit of a healthy pullback. So just watch. If we start to get below 65.16, this is a 4-hour chart. If we close below 65.16 on the 4-hour chart, just watch that 65.00, 64.93 area. That's the next sort of support area. That's the low for the day. And then a break lower from then. We've got yesterday's low at 64.75. So sort of every 25 ticks really, we've kind of got levels to keep an eye out for. And then if we get through 64.50, that's going to be more of a problem because that was the low on that weekly chart, wasn't it? 64.57 if I remember correctly. No, 16. Sorry, no, that's wrong. That's 62.87. Where are we? 4-hour chart I was on. But the next big support anyway, if we do start to break this uptrend, is going to be 64.30, 64.20 area, where I would imagine we'd then be looking quite positive. Scrunch it up. There's some good fib support there. Anyway, that's a long way off. It's far too early to suggest that we might do that. If we break through 65.56, well, you know, the uptrend continues. We've broken that previous high, and it's 65.80 to target. We've then got a rollover gap that goes up to 66.35. So it's a difficult one. We're not really going anywhere. There's no identifiable trend except for the very short-term uptrend, which is only a week and a bit old. But we are sitting above some good moving averages. There's no reason to get bearish at the moment unless we do break that uptrend on the 4-hour chart, which is sort of, we'd have to see a close below 65.16 on the 4-hour chart really for it to be to start feeling negative about this. Retail numbers have come in good. Okay, well there you go. So more reason to be positive. Yeah, I can't get negative. I'd like to get negative. It's gravity defying this market. I'm looking for a reason to sell it, but I just haven't seen it yet. I in fact got a little bit short this morning just before that Chinese downgrade and thought I was going to be really on side. Went out to a few meetings. I've come back and the market's just bounced straight back up again. So being stubborn, I'll probably hold a short. But I'll be out if we go above 65.60 because I'm clearly going to be wrong. Okay, you're short on Brent, so we'll have a look at Brent as well then. Brent actually looks more negative than stock market, so we'll probably in a better trade than I am here, being short the FTSE. I guess that's all I can say about the FTSE, unless you've got any questions on it. Let's have a look at Brent then. Brent crude does look a bit more negative. So there's the weekly chart. We've got some trend lines which we managed to pierce above and get also through that fib level of 113.15. Again, this market isn't really going anywhere and the range is just narrowing. So sooner or later we're going to have a breakout. But what month or what week that will be, I certainly don't know. We're just going to stick with the trend. The moving averages are just going sideways. They're giving us no clue at all. So we're in a small uptrend from, where is this, middle of April rather. But barely. I mean, it speaks for itself. It's basically sideways on the weekly chart at least. Okay, daily chart, we've got a little bit overbought. On the stochastics, we've eased back. That caused us to top out a little bit here after that big rally on the 10th of October. I think that was when we first thought that there was going to be a budget deal. Anyway, we've eased off since then, but again, look, we're just going sideways. We're sitting above the 100-day moving average. That certainly did its job around the beginning of October or the end of September, beginning of October. That did its job. We never managed to close below it. We did pierce it a few times intraday, but 100-day moving average is really doing its job with good support. What can I tell you? Let's see if we can get some trend lines out of this chart. There we go. So you can see it's in some sort of uptrend, but I'm tempted to say this is some sort of head and shoulders pattern, but it's not really, because it's not at the top of a big move. You can see how we've got this sort of left shoulder, a big head at the top, and then a potential right shoulder forming. But unless you see that sort of pattern at the top of a decent rally, you can't really get bearish. And considering this whole pattern is probably bigger than the recent rally, I don't think it's relevant. But it's worth pointing out, because sometimes people do notice these patterns, but you can't really pay any attention to it when it's not at the top of a big rally. What can I make of it? Okay, well, we're overbought on the daily chart. We have started to drift lower. We are below this bigger trend line, which goes back all the way to last year, isn't it? I think, if I remember rightly. Yeah, it goes back to March 2012, so what's that, 18 months. So the fact that we're just hovering below this trend line is another slight negative. If you put a gun to my head, I'd say I'd rather be short on Brent as well. But you're just really range trading. I mean, top of the range is 112, 00, 112.30, and then you're going to find support from the 100-day moving average and some fibbing out. Well, the 100 and 200-day moving average is around 108.50, 108.35. You've got a little bit of fib support there, and you've also got a nice uptrend line going back to the 24th of June, which also is starting to coincide with that 108.50. Well, the exact price is 108.15. So anywhere in that low 108 area is going to be good support. You've got a target of 108.50. Okay, well, that's fair enough. I would agree with that if you're short, and you can see it down there. There is every chance you will see it down there, and I would certainly be covering shorts if we get down there. Probably even try along. I mean, you've got so much support there. Fib, 100, 200-day moving averages, decent trend line going back to, what did I say, 24th of June, so that's several months long. That's really, really good support. And then we've just got to trade those sort of ranges until we see a breakout. So I can't disagree with the trade you've got. And if you were short from this morning, you're already seeing some nice profit on there. We start getting above 111.00, it's not going to look quite so negative. And then we've got every chance of testing 112, 112.30, but probably worth trying to short up there. Some good resistance. Yeah, not the most exciting market. I mean, while we're on Brent, let's just have a look at WTI. While it loads. Okay, so slightly more positive on WTI. We had a fairly decent rally through the summer, and we managed to break higher at the beginning of July and continue up. We've eased off over the last few weeks. What's that telling us? Weekly chart's getting a bit oversold, but not much. I mean, all in all, these markets have really just been stuck in the range right through. I mean, on the grand scale of things, look at this. This has just been stuck in the range right through since 2011. We haven't actually gone anywhere. I just emphasise that point with some trend lines. Well, actually, I just go from that point there, and from this point here, if we just solely look at that area going back to the beginning of 2012, that's just a slightly rising wedge, but barely. You've got something going on here in the middle. If we were to join this up. Okay, so direction-wise, nothing to say. Trend-wise, nothing to say. But more recently, we have been in a fairly decent downtrend since the beginning of September, and that's a thing to focus on, really. Sorry about all these red lines. These are all my fib levels I have to keep track of. But WTI has been sinking. We hit the 100-day moving average around the beginning of October, and we managed on a closing basis at least to hold above there, but we've broken below that on the 9th of October. And since then, we've pretty much been closing below the 100-day moving average every day. So this is keeping quite a negative tone on it. The 21-day moving average is about to cross the 100-day moving average as it heads lower. So again, another little negative sentiment there. We're holding below this trend line, which goes back to 28th of August. We haven't even really managed to get close to that in the last few days. So although it's been relatively sideways recently, it still looks quite negative. Stochastics are kind of pointing lower. So all in all, not great. We're not hitting any major support levels either. We've got a little bit of support around the 100 double area and the psychological area. And what have we got for an October low? We've got 160. So below there, we're probably looking at 120 area. So if anything, that backs up your short Brent. WTI doesn't look particularly positive at the moment. But again, lots of sideways action. So really fairly boring. You can see that sideways action is emphasized here on the 4-hour chart. If we just focus on the last few days, it really is just sideways. So that's a case of fibs can be quite useful in this sort of scenario when we're just going sideways, and it just allows you to trade the levels. We stick these on here and see if they are working. Get rid of that one so we don't confuse the issue. Are the fibs working on the short term? Yes, they are. Look, 6 to 1.8 worked very nicely yesterday at 102.94. The high was 102.97. You're not going to get it any more accurate than that. We slid from there and fell to the 102.04 fib support level. That held almost perfectly, 102.07, 102.05. We've broken low this morning, so we've now got 101.49. We've held above there. We've got to 101.58, so we've got to within less than 10 points of that support level. So yeah, I think it's just a case of trade these fib levels until we see some sort of breakout. But you can see the WTI is ranging slightly edging lower. Of course, 170, 160 will be the big area to watch if we break below 101.50, because that's not only the low of the recent range, but it's also the low for October. So monthly low, quite important. We'll have to see what happens. Wouldn't be surprised to see it test it, to be honest. We might hover above 101.50, but we could even break that tomorrow and maybe give that 101.70, 60 level a good going over before the end of the week. Weekly close tomorrow. Weekly closes are always worth noting. And if we were to close below 102.00 tomorrow in WTI crude, that would be another negative because we haven't managed to close below there for quite a long time. Not since the 17th of June, at the end of June anyway. So it's a good fib level and it's good support, and let's see if we close below there tomorrow. Okay, that's probably enough for oil. Should we get back to the currencies? Any parts of anyone else needs to look at? Probably euros worth having to look at. One of the main ones. Right, weekly chart for the euro. Right, well, we've edged up. We didn't really sink too far, and you can see why we held this level. I'll show you in a minute on the daily chart. But looking for overbought, we were always looking for that 137.001, 37.10, and I do think we're going to struggle there. It is a yearly high. It's this year's high, in fact. We are very, very overbought in the daily chart, but that was always our target. I did start to think we weren't going to see that when they sorted things out in Washington and came to some sort of agreement. But today's downgrading by the Chinese of the US has made sure that we have roared higher, and we're heading very, very much towards that 137.00 area. Okay, so we held good support, and I'll show you why. So the recent previous high, beginning of October, was 136.46. As we start to ease off from being very, very overbought in the daily chart, you can see this trend line just worked beautifully, really. That peak on the 19th of June, and then we had another peak on the 20th of August. It's all very simple. Gave us a trend line, and look how nicely that held on many, many, many occasions. Initially when we pulled back to it and then went higher, and then of course acted as very good support. So if you were trading that trend line, which we had in our reports every morning, certainly did all right. We had 134, 95, 85 as our area, and then we never, with a stop below 70, and that seemed to work nicely on many days because we never really got through 70. One of those we got was 72 or something. Anyway, we're propelled higher now. We're back up above the 21-day moving average. It's all looking quite positive. Daily charts, the stochastics look positive. We've managed to relieve the overbought scenario. They're all pointing higher. 4-hour chart still looks positive. Stochastics look positive. Yes, we're entering overbought territory, but that's no reason to get short as we break higher. So we need to see really a good push through 136.46. That's the previous high from the beginning of October. We've apparently only managed to get to 136.50 today, so we've given it a good test, but I wouldn't be shorting it here. I don't think there's any good reason to short it just because we've tested October highs. If we do close above 136.50 tonight, and certainly on a weekly basis, then that's going to give us the green light to go for 137 down low, 137.10, and we'll have to see what happens there. We are going to be pretty overbought then. Let me see, what's this weekly chart? Let's see if we do get through there, where the next level we are looking for is, yeah, if we get through that, this year's high 137.10, then we're looking for 138.33. So yeah, Aussie, Euro looking pretty positive, looking a little bit overdone, and we're probably going to start to struggle with gains, but I wouldn't be selling it yet. Aussie GBP, sure, let's look at that. Hello? Hello, hello? Hello? Okay now? Okay now. Brilliant. Okay. Sorry about that. Oh, I have to get a new microphone. Okay, so Aussie versus the pound. Yeah, we've got good support from 100-day moving average now at 59.41 today. If we happen to get down that far, getting a bit overbought on the daily chart, not enough to start thinking about getting short, I don't think. But what it does mean is 60.12 is probably going to hold at this stage. Watch that level; it's quite a good level. If we don't get through 60.12 on a closing basis this week, which means tonight or tomorrow night, we could be in for some profit taking on this from the start of next week. Definitely running out of steam. So watch 60.12 and watch 59.40. Those are going to be the important levels to watch, especially on a closing basis. Buy on dips, yes, I would say you do buy on dips, and I would say that there is a good chance of some profit taking next week. As I say, watch those weekly closes below 60.12 or 59.40. If we do see some profit taking, yeah, we could do. And would I be buying on a dip? Yes, I would. 4-hour chart, nothing really to indicate we're going to come off yet. Let's put a trend line on here, see how that pans out. Yeah, trend line's working very well. You can see there on the yesterday we gave it a good test. Today we've given it a decent test as well, down at 59.55. So trend line's working really, really well. But a break below that will sort of indicate that we may have also another indication that we may just have topped out for the short term, at least for a week or so. 4-hour chart got a bit overbought. Yeah, maybe we're not going to see 60-12 again. Just be careful. We've got this trend line now, which is going to be around the 59.55 area. So if we start to break below 59.55, we're going to see 59.38. 59.38, 59.31 area, that's sort of the low over the last couple of days. That's going to be important. Below 59.55, watch 59.38.31 area. Below there, then we really are looking at some more profit taking, and we could see 59.00 quite quickly. That's not bad support. Even on the 4-hour chart, probably be quite oversold there. So who knows? 59.00 might well hold it. And if you're trying along there, which I'm guessing, I'd have to have a look at it again when we get there. But buying around 59.00 and having a stop below the 58.89 low here from the 13th of October certainly is a very, very low risk trade and probably worth it. And I think you're right. I think buying on dips is the right strategy. You know, we have got a decent uptrend, which you can, on the daily chart at least, we've got a decent little uptrend. What did I say? 59.00 with a stop below 58.80. I think I said that, didn't I? 58.89 is the low. So 59.00, I'd say stop below 58.80. How does that look on the daily chart? Yeah, we've got 21-day moving average of 58.70. So maybe a stop below there, actually, buying it down to that sort of area. Although that will be a little bit higher by the time we get there. Yeah, I'd say you're right. Buying on dips. Watch that 59.00 area. Below 58.70, yeah, not so positive. And then we'll probably see 58.40, which is the next fib support level. That ties in with the 55-day moving average at 58.47. So gives you an idea of some levels to watch there. But if we do fall as far as 58.40, I'd be surprised to see it go any lower, actually. I would say that would be a very, very nice buying opportunity down at 58.50, 58.40 if we fall that far. And to be quite honest, I wouldn't be surprised if we don't fall that far. Okay, what's next? So let's have a look at Aussie versus dollar. Have we done that one? No, we did that one at the start. So we'll stick with currencies. Let's look at cable. It's been quite a good one lately. Cable, pound versus the dollar. So, has been interesting, unlike many currencies. We've had a really good run up through the summer from the beginning of July. If you've been following me, you'll know I was banging on about the 162.25 area, which is this trend line here. In fact, I think we were talking about that on my last webinar for FX Street, and I was saying I really don't think it's wise to be long here. You've really got to be taking money off the table if you are long. I think there's a significant risk of a sell-off. Anyway, we did dip for a couple of weeks. We are looking overbought on the weekly chart. So I think we're still going to struggle around that 162.00 area. Of course, this week we're looking quite positive after today's move. The levels are working really, really, really well in cable if you're trading it. The fib levels are working particularly well. Look at this. We've got a nice little uptrend going back to the 9th of July. Decent trend line. We gave it a really good test. We never managed to close below it on a daily basis, even though we spiked through into a day. 159.00, 159.19 was the support level, the fib support level. We gave it a good test 1, 2, 3, 4, 5, 6 days in a row. And it managed to hold up. The lowest we got was 158.95, not enough to trigger our stops. So if we were buying there each day, that worked very, very nicely. Today actually did look like there was potential to break that uptrend, but we were saved by the downgrade and the pounds rocketed higher against the dollar on that. So nicely confirming today that uptrend is holding, that fib level is holding. And if you've been buying it down to there, which we've been suggesting in our reports all week, you'd have done very, very nicely. The daily stochastic is now turning positive. It got very, very oversold, which was always another good reason to be buying it around that support level. and we've rocketed off there. We've now shot yesterday. The 21-day moving average worked really nicely as resistance. We got a high of 60.58, which was the exact reading for the 21-day moving average. We've pushed through there this morning, so further bullish confirmation. We're just about to test a trend line, which is still quite relevant. That's up at 161.18, which coincides quite nicely with 161.22, some previous daily highs, 161.22, 24 area. So that's going to be the level to watch this afternoon, 161.25. The close above there tonight would be positive again, and certainly no reason to be negative on this at the moment. We're not overbought on the 4-hour chart. We're still looking positive there. We are. This is why we're hovering. Okay, so 161.19.22 is 161.19 anyway. Let me just get rid of that level. Okay, yeah, I remember this from my report this morning. 161.19 was a target. As I said, we've got previous daily highs of 161.22.24, coincides with 61.8 fib resistance level at 161.19. That's exactly the reason why we're not getting through there at the moment. We are struggling, but it does look positive. So we should continue to struggle around 161.19. That's not going to be easy to break. Could be the high for the day. I think I put that in my report, but that could well be the high for the day. If we do come off, I don't think we're going to come off very far. 160.75 looks like a really nice support level. 160.75 maybe as far as 160.60. But don't rule out a push through 161.25 even today. And keep us going higher for 161.50, then 161.80 would be a really nice target. You can see a bit of activity around 161.80 area. So yeah, all in all positive. If we ease off, that's probably a buying opportunity. If we break through 161.25, which certainly I wouldn't rule out today, even after such a big move, then we're looking for, what did I say, 161.80, I think I said. 161.80, yes, and also don't forget this big trend line, which is around the 162.14 area. So anywhere in the 160.180, 162.15 area, that sort of 40 pip area is where we should struggle. We should start to look overbought, I think, on the daily chart. Where are we now? Remind me. First stochastics. No, we'll be nowhere near overbought. But we will be overbought on the 4-hour chart. So it's going to get interesting around there, around that 162.00 area. We'll have to review it again there. I mean, I would have thought we're going to really struggle there. I would have thought there might be a risk that we start to sell off again. Certainly worth trying shorts probably around the low 162.00 area, because you can just use stops above the 162.60 high that we had, the high for September, which is when we pierced that trend line and didn't manage to close above it, and plunged in fact. So you've got to be selling in the low 162 area, I think, with the stop above 162.60. You have to. That's one of those trades you just got to do. If you're a trader, I think you got to do it. Okay, hope that makes sense. What haven't we done? Haven't done again. And then we'll move on to gold. Don't forget to give me any requests that you have if you've got positions on, or if you're looking at any markets. Dollar yen. Oh, another one just going sideways. Okay, so that's a 21-week moving average. The blue line, we barely managed to close above that. So that seems to be doing its job quite nicely on a closing basis on a weekly basis anyway. Nothing much to say from the weekly chart really. We haven't managed to close below 97.45, which is good Fibonacci support. That seems to be doing its job. I haven't closed below there on a weekly basis. Daily, getting overcooked. Oh yeah, this reminds me. Okay, so blow up the daily chart, but the 4-hour chart I'm just going to show you. Where are we? There we go. Okay, so we sold off from around the middle of September. Quite a sharp sell-off actually, which was a little bit unpredicted. I didn't really see that coming, but anyway, we broke the 100-day moving average. That then acted as resistance. We collapsed. We sold down to 96.57. That was very good support. That was supposed to hold. And if you remember from my last webinar, I was banging on about why we needed to buy this, because it was hitting the 200-day moving average, and there was some good support there as well. And it bottomed out almost to the last pip. That worked really, really nicely. we shot higher, which was exactly what we were supposed to do. This is actually trading quite nicely. Levels are really working quite well here. We rallied off 200-day moving average. We actually managed to get through the 100-day moving average. Up 99.06 was clearly big fib resistances. We got very, very overbought. I do like that 61.8. That does work especially well on a bounce in a bear move. We didn't quite get there. We got to 99.00. So we got to within 6 pips of it. I'd say that's pretty close. I'm sure you'd be happy with that. And we plunged today well. We were looking for a sell-off from 96.00. Not quite as far as that, to be fair. We've been helped by the downgrade. You can see that 98.42 was something that held initially this morning. The downgrade saw us plunge again through 38 short-term 38.2% down to the 50% level at 97.76. That has held the downside almost absolutely perfectly. The low is 97.75 today. That's really done its job, but still looks negative. The more recent picture is a bear move. If we go back to September, we had a bear move through September. We've had a nice bounce in the bear move to the 61.8% resistance. So we're now resuming that bear move. Yes, we found support at 50%, fair enough, but we've now also got resistance at 98.06, which has certainly done its job. You can see you don't even need fibs. You can just see that the 98.0500 area was support here. Although we did get as far as 97.97, and then we rallied off there. So needless to say, that's going to be resistance on the way back up, and we did top out 98.07 on the bounce. So yeah, the levels work really, really well on this market. If you can be bothered just to sit there and trade the levels, you can nick dips all day long on this. So we're back down, heading towards the 97.75 area. Don't think that's going to hold for too long. Doesn't look positive. I would be looking for 97.47. That's going to be stronger. 97.47. Let me just see the daily chart. 97. Yeah, 97.52, 97.47. Oh yes, I remember that from this morning. That's good support. That should hold at least today. Wouldn't be surprised to see that today actually. But daily chart still, we got overbought on that bounce. So overall, still looking lower. We've only managed to close above the 100-day moving average on a couple of occasions, and we're now well below that. So 97.52, 97.47 does look like a realistic target. At the moment, we should find some good support there. We'd probably be oversold short term, but still looks like selling into rallies at the moment is the best strategy for this. Yeah, I'm just going to chuck a trend line on here. Okay, there you can see that weekly picture. We're going to get a break sooner or later. This weekly picture sums it up quite nicely, really, doesn't it? We've got a triangle at the top of a bull move, which in theory means we break higher and continue the trend. That's interesting. So maybe we will hold 97.45. That's another big level on the weekly chart. So that really is quite an interesting level there, 97.50, 97.45. It's also the lower end of this triangle. Maybe we're going to test that, and maybe we're going to have a big old rally off there, and maybe we're going to break the upper end of that triangle. And maybe we're going to continue higher on the next leg, and at least, who knows, maybe even see 103.73, maybe even retest those highs. Quite interesting. Something to watch there, definitely. Keep an eye on that 97.50.45 area. That is going to be important. A weekly close below there is going to suggest that we're going to break down. So yeah, all I can say at the moment is watch that level. 97.09. So if you are buying it around 97.50 area, 97.45, you've got the 200-day moving average at 97.09. It's going to be a little bit higher by the time you get there, but 97.10 area. So if we start to break below there, you probably want to be out of those longs. And considering that we have broken, and we'll be looking at 96.57, I would have thought without too much trouble. Yeah, retesting those October lows, 96.57. Okay, so a few ideas in there for trading dollar yen. If we get back up to 99.00, again, we're probably going to struggle there. And the upper end of the triangle is 99.60. How does that look on the daily chart? 99.60. Well, actually, not much going on around 99.60. But anyway, I think you get the picture. If you can draw those lines on your own chart, keep an eye out. Keep an eye out for a break above the sort of 99.50 area and go with it. Down at 97.5 looks like it's probably worth a buying opportunity. We stop below 200-day moving average, which is around 97.10. Guess that's all I can say. We looked at the 4-hour chart. Yes, we have, and it's just selling off a little bit. Okay, don't think I can add anything to that unless anyone's got any questions. How are we doing for time? 10 to. Have we got time for anything else? Any more requests? Anyone want me to look at anything? If not, there's no point looking at indexes. S&P is heading towards its previous high, so I don't think there's anything I can say. Oh, gold. Gold's always worth a look. It's had a good move today. Oh, gold. There we go. Been requested. Yeah, gold. Okay, so I've been bearish on gold for a long, long time, but do I need to change my view? Let's have a look. Well, we're still in the downtrend. We've had a really good move today on the weaker dollar, so I guess that's not a huge surprise. But when you look at the longer term weekly chart, going back a year, you can just see that we are in a bear trend. In fact, I think this trend line now is not particularly relevant. Okay, so we are in a bear trend. Today doesn't change that. 1325 is resistance, fib resistance. Having broken below that, that's now resistance. That seems to be holding today. So I don't think, I'm sure all the dollar bulls are out there screaming how this is the low and gold's going higher and blah 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 blah, all that rubbish. I don't believe it at the moment. It's going to have to break some more levels before I start getting bullish on gold. However, we have broken a short-term downtrend going back to beginning of September. Look, there we go. We've broken a short-term downtrend line. Well, kind of. Actually, I think I might even need to redraw that before I make that statement. Let me just check. No, we've definitely broken it. Okay, so reason to be bullish, short term at least. What's my sticker sticks? Excuse me, sorry. Blimey, this isn't working, is it? Okay, seems to put an RSI on there as well, which I don't want, but anyway, instead of messing about, I'll just carry on. Okay, so the daily stochastics has turned positive. Oh, actually, look, this candle was quite positive here. Ah, yes, I remember. If you get my gold report in the morning, you'll know that I did actually turn bullish on this. I've completely forgotten what I've written. Let me get rid of that. Okay, right. 2 days ago, I did actually get bullish on gold. This candle was very positive. We plunged to 1250, which was a good support level. I could get why. Let me have a look. 1250 was a support level. I can't remember why. I'm trying to speed up because we've got too much time left. Anyway, this is a bullish candle. We spiked lower. We closed above the previous day's close, and the day before that, that's what you call a hammer, is it? I think, or I usually call it a reversal day. A big spike lower, but a higher close near the top of the candle, always bullish. When you get oversold like that, you see a candle like that, it's always a good sign that probably the downtrend's ended. So we did call a low actually on the following day, the 16th, which was yesterday. We didn't manage to push much higher yesterday, but we have today. Now we've broken that upper trend line, which I didn't really expect us to get this far, to be honest. We've gone further than I expected at this stage, thanks to the downgrade and the weaker dollar. So now we're through 1307. The picture looks continuously more positive. What can I say? Okay, so we're heading through to resistance at 1327. Now, I think that 1325 area is resistance on the weekly chart as well. Yes, it is 1325, 1327. Wouldn't be surprised to see it. We're not that far away from it. 1325, 1327. 1328 is also 100-day moving average. So this is probably where we're going to head for. This is also where we're going to struggle. The daily chart does look fairly positive still, although this is still a bounce in the bear trend. I'm going to take this off here, and I'm going to put this on here. Okay, so take this off here, 2 new lines. There we go. Right, so if we get through that whole 1320 area is like resistance. So we've got a 38.2% retracement at 1321. We've so far managed to get to 1323, so not bad. We didn't manage to hold it. But on the short term, on the daily chart, we do have that 100-day moving average at 1328. So we're going to really have to see it close above 1328. If we do, then I will start getting more positive in the short term, at least about gold. However, if all we manage is 1322, 1328 area, and there is a distinct possibility that we hold there, because gold really is not looking positive in the longer term. Look, I bet we've got 1328 as a 21-week moving average as well. And then we've got another trend line around the 13, not until 1350. So yeah, we're really going to struggle in the 1320s. We should really struggle in the 1320s. Daily stochastics need to unwind from a very, very oversold position, and they're doing that nicely. But you know, if we hover around the mid 1320s for a couple of days, that's going to be nicely unwound, and the weekly isn't oversold. So you know, I just can't get that bullish about gold yet, I'm afraid, and I just can't. We'd have to see at least a close above 1328. You know, if we close above there tomorrow night on a weekly basis, yeah, maybe I need to think about becoming a bit more positive. But until that happens, I can't be. Sorry, gold balls. That's just the way it is. That's it. I think we're running out of time. Oil, we did earlier oil. I'll quickly run over it again because I've had the request from Jack. Oil is more negative than positive. I'll just stick to the daily charts. Stochastics look weak. We're in a downtrend. We haven't managed to get back above the 100-day moving average, which is doing its job nicely, doing resistance, just as it did yesterday. The reading was 102.94. We got to 102.97. The 21-day moving average is about to cross over the 100-day moving average, which is a further negative. We've been in a downtrend since before the end of September, before the beginning of September, the end of August. Just not looking positive. We've been sort of going sideways recently, but not one that I would personally want to be long at the moment. Selling into rally seems to be working, and anything up to sort of 103.00 looks like it can hold. It certainly did yesterday. Don't see any reason why it won't at the moment. Short term doesn't change anything of that view. We've been we had a little bit of a bounce. We're sort of edging down again. 101.50 is a level to watch this afternoon. The fibs are working really, really well in the short term. Those levels are 101.50. 102.0005, 102.50, 102.90, 103.00. Those levels are all working quite well. Watch them. If we start getting below 101.50, a retest of 101, 170, 160 looks likely. Will it hold? Possibly. We need it to. We might be forming a base here. We're going quite sideways, but there's nothing to confirm that at this stage. So I wouldn't be advising longs. I'd rather be short than long, put it that way. But we'll see if we get some sort of double bottom or some sort of bottoming pattern here, maybe some sort of rounded bottom. But yeah, you know, unless we get through 103.00 or at least or 103.35, really, I can't get positive because that's the only thing that will break the downtrend in all. Yeah, that's all I can say for the moment. I think that's it. It's 2 minutes to 3, so I guess we've got to wrap up. For the next webinar. Thanks very much indeed, everybody. I think you probably know my website. It is daytraderideas.co.uk. I am starting to do more webinars myself, at least 2 or 3 times a week. So keep an eye on my Twitter feed and you can join me for those as well. Thanks very much indeed, everybody.